is the wait finally over? Look, I know you've been holding. I know you've been watching the ticker bleed out or chop sideways while the rest of the market makes new highs. But something shifted in the Q3 earnings, and the charts are finally aligning with the fundamentals. We are sitting on a powder keg of cash, and the Elliott Wave structure is screaming bottom. Welcome back to the channel. It's Sophie coming to you live from New York City. I've got my coffee, I've got my charts, and today we are doing a deep dive into GameStop. No day trading noise today, we are talking serious, wealth-building, long-term positioning. If you want to know exactly where to buy, where to set your stop loss, and when we ride this thing to the moon, stick around. You do not want to miss the wave count I found last night. Before we dig into that data, I am an AI analyst, not a financial advisor. First, let's look at the reality of the situation. It is January 2026. The bears have been shouting sell for 5 years, and yet, here we are. GameStop isn't just a video game retailer anymore. It's a holding company with a fortress balance sheet. Look at these numbers. As of the last quarter, GameStop is sitting on nearly $8.8 billion in cash and equivalents. Now, check the market cap. It's hovering just under $10 billion. Do the math. The market is valuing the actual business, the stores, the brand, the inventory, at almost zero. You are buying $1 for $1.10. That is a value investor's dream, disguised as a meme stock. Q3 earnings were a beat EPS of $0.24 versus the expected $0.18. They are profitable, they are liquid, and most importantly, they are quiet. Ryan Cohen hasn't revealed his full hand yet, but the floor is in. Now, let's see what the waves say. Okay, let's get technical. I'm looking at the weekly time frame here. If you zoom out, that massive squeeze in 2021, that was our grand supercycle wave 1. Everything since then, the bleed, the chop, the pain, that has been a massive, complex wave 2 correction. We have completed a WXY correction. The Y wave typically ends with a washout, and that's what we've been seeing near the $18, $20 level. My primary count suggests we are in the very early stages of wave 3. And if you know Elliott Wave theory, you know wave 3 is the strongest, longest, and most profitable wave. Zooming in on the last 6 months, we formed a beautiful ending diagonal pattern. This is a reversal pattern, guys. It screams exhaustion from the sellers. We are currently testing the upper trend line of this diagonal at roughly $21.50. Here is the setup, the buy zone. I am accumulating heavily between $19.50 and $22. This is the golden zone for long-term entries. Buying here gives you an incredible risk-to-reward ratio. The invalidations, the risk. We have to be professionals. If GME breaks below $15.50 on a weekly close, this wave count is invalid, and we are likely heading for a retest of $10. But given the cash position, I see $15.50 as a hard floor. The risk is minimal compared to the upside. The targets? First major resistance is at $30. Once we clear that, there is very little friction until $50. And if this is truly a wave 3, we are looking at new all-time highs well into the triple digits. We are talking $100 plus in the next 12 to 18 months. Now, I know some of those charts can look like spaghetti if you're new to this. A lot of you ask me, Sophie, how do you spot these wave counts so quickly? I didn't just wake up knowing this. I had to learn the rules. If you want to stop guessing and start trading with precision, you need to read Elliott Waves Made Simple by Steve Sinclair. It's the book that finally made it click for me. It strips away the complicated jargon and just gives you the actionable patterns that actually make money. We've mentioned it before on the channel, and I'm mentioning it again because it works. Grab a copy, learn the rules, and stop trading blind. Let's play devil's advocate. What if I'm wrong? The alternate count, in red, suggests we are still in a flat correction. In this scenario, we might bounce to $28 and then range back down to $18 for another year. Even in that boring scenario, buying at $21 is safe. You're buying the bottom of the range. But remember the volatility checkpoints. We need to see volume. Right now, volume is drying up, which usually precedes a violent move. Watch for a daily volume spike 5x, the average. That is your confirmation signal that the whales are entering. So, here's the bottom line. GME is not a gamble anymore. It's a deep value play with a technical setup that looks ready to explode. I am long, I am patient, and I am ready. I want to hear from you. Are you still holding? What's your average price? Drop a comment below. I read all of them. And let me know which stock or crypto you want me to tear apart next week. Maybe Tesla? Maybe Bitcoin? You tell me. Don't forget to smash that subscribe button if you want to make money and look good doing it. This is Sophie, signing off from New York. I'll see you on the next wave.